Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, September 10, 2014, and interesting day today in the market. You're looking at a daily chart of the spider, the SPY, and let's go back to yesterday, because yesterday, see this line here I'm putting in where the crossbar is? Okay, this was an important level. See, this was a pivot high, okay, and then a pivot low, so that became an important level. So resistance, okay, becomes support. Market goes up, comes back down, okay, breaks that level, okay, which could have produced more downside, okay, came into this, basically this pivot top here, all right, and then today we opened up lower than that, and then the market fought, the bulls fought back, and they closed above yesterday's low, which is important, okay. If we closed below yesterday's low today, there would be no question that more downside would be in the cards. However, because we closed above yesterday's low, okay, it's kind of a neutral setting in my mind for the market over the next day or so. And tonight's important because you have the president speaking. And I'm putting together this video before the president speaks, so I don't know what he said or what he will say. But what's interesting is, and I'm going to show you a lot of other stuff, some stuff we don't normally talk about, maybe from time to time, but it's interesting. The president's speaking tonight. Tomorrow is the anniversary of 9/11, okay, which it just seems like it is an important day, obviously, but in terms of the markets, it seems like an important day. It just seems like things can happen between the president speaking tonight about the important events going on around the world, specifically in the Middle East, and I'm sure he's talking about ISIS tonight, but tomorrow being September 11th, it just seems kind of eerie in my mind. Don't read anything into that. It's just my feeling that things could change following or including and or following tomorrow. So what I mean by that is, let's go over and I'll begin to tell you what I'm talking about. Let's take a look at the U.S. dollar. This is the ETF. Well, no, it's not. Wrong symbol. Okay, here we go. This is the ETF of the U.S. dollar. This is the daily chart. All right. Now, look at this parabolic move. Okay, obviously it's going to pull back at some point. So let's take a look at a longer term picture and see where we are. Look at this parabolic move. This is way overbought, way extended, and when it gets up into these areas here of way extended, it's really hard to begin to pick a top because it's way past the point of the move it should have had, right? It should have really stalled out at the 200 period moving average, this pivot high, and it should have pulled back at least for a few days, but it just kept going, so it's way overbought. But where are we? So we're coming up into this pivot high, and then way up here you have this pivot high, okay? Let's just look at a longer term picture to get just a bigger bird's eye view, okay? You see where this is coming into? This is going to be a ton of resistance right here, okay? There's no question about it, all right? And we're pretty close there. So I would say that there could be another push to the upside with the U.S. dollar, but I would look for a pullback in the U.S. dollar. And then now let's look at the FXE, which is the euro, and you'll see the opposite picture in the euro. This is the monthly. We'll start with the longer term view and work backwards now. So here you're coming into the reverse, the mirror image of the dollar is the euro. You're coming into these pivot lows here. Okay, these are tons and tons of resistance. This is 1 month, 2 month, 3 month, 4 month above this level. 5 months that it banged upon this level and couldn't break through and then headed higher. Okay, you can bet your bottom dollar this is going to be resistance, no question. Okay, now let's just go back to the daily and see. You see this extended move. It's just melted away. It's definitely in a downtrend, and it certainly can go lower. But I say that it's got to bounce, and the bounce could be a decent bounce because of these levels here, which is translated from the monthly chart we just looked at. Okay, so I think that, you know, with world events being discussed, and you have, you know, the prospect of call it another war maybe. And if we're going to step up our military action, what are some of the things that happen when we get into these scenarios. Do currencies move? Yeah, because global events tend to make currencies move. Does gold move? Yeah, let's take a look at gold. Okay, we talk about gold just about every night, but let's talk about it in the context of where we are longer term and what I expect shorter term. Okay, here we are. Now, gold went farther down than I thought it would, but we're at a support level. Okay, this is not a major support level, but it's pretty good support. Okay, this would be very good support. Okay, this double bottom here, but this is good support. Okay, let's look at a longer term picture of gold. Okay, and then we'll squeeze it back to the daily. All right, so this could be construed as a bearish pattern. Okay, however, okay, because it came into what I would say is a breakout point here, okay, I would say this is more likely a retracement with another move higher, okay, than a bearish pattern and a breakdown, but certainly you could get the breakdown, okay. Now let's look at a daily chart. If it comes up here. Okay, here we go. So the daily chart, all right, you're coming into this area here, this double bottom translated from the weekly I just showed you. Okay, and I think you just had so much melting away and so much negative sentiment to gold, and now you have the president talking, you have the war picture on the table, and you have that fear trade that may pop up. So you have the currency picture, you have the gold picture coming into some lows, ripe for a bounce potentially. Let's look at one more thing. Let's look at oil, USO. Okay, same picture. It's very, very weak. Okay, it's been nothing but going down. Okay, weekly chart. All right, you're coming into, this double bottom is a big, big level, but that's way down from here. I said that a good level would be 34. Okay, where's 34? I said 34 is a good level right here. Okay, just the pierce of 34. Well, we kind of got there today, so I'm not going to split hairs. If it goes down another, if it breaks 34 and goes down to 34.80, 34.75, 34.85, that's okay. But I'm saying that aggressive traders can probably look for a bounce in oil right now. My members will get a better level, more secure level when we get there, but aggressive traders could begin to look for a bounce in oil. So you have oil, global events, gold, you have the trade, the fear trade, okay? You have the Middle East situation, the president talking tonight. You have currencies, world events, president talking tonight. You have, we should be in a turn window for the stock market, but nevertheless, the stock market could go either way tomorrow. Who knows? But certainly, I think we're in a window, and I know let's not forget about Alibaba and the 40 Thieves, Alibaba and options expiration next week. So, the market could certainly bounce around and technically hold up for another 6 or so trading days, maybe 7 trading days. But after that, I think you could be seeing some downside in the market. You could begin to see the gold, the oil, the dollar-euro trade play out. So I feel like we're in this window right now, and that's why I wanted to bring these things to your attention. I think they're very important. Let's take a look at interest rates real quick. This is the 10-year interest rate. Okay, this is the weekly chart. You had a nice bottom, and you had a bounce, but I don't think we're finished going down in interest rates. I don't think I'm in the camp of interest rates have to go higher. Interest rates have had to go higher for years, and they just don't. So until I see real hardcore evidence that interest rates are going higher, and with the stock market prospects of going lower, I just feel like interest rates are going to go lower still. So, I don't know how high this 10-year can get right now. I suppose it can get up to 260, 258, something like that. But I wouldn't be surprised to stall out right here, and we could even head back down. So we're kind of probably in a zone for this bounce is over, and I think that's all it was. I think it was just a bounce. If you look at a longer term chart, okay, unless we can hold this moving average and continue higher, I think if we finish the week, this is a weekly chart, if we finish the week below this 20 moving average here, then I think we head lower, and we'll have to play that one by ear. I mean, just because we're going to head lower doesn't mean that sometime in 2015 we don't head higher, or even later this year. I just think for now, I think we head lower, and that's my take on interest rates. So if you believe what I believe and interest rates are going to head lower, okay, then you might want to take a trade in the TLT, which is the 20 to 30 year Treasury bond ETF. And if Treasuries, if the price of Treasury bonds is going to go higher because interest rates are going to go lower, then TLT will go higher. And if this is going to bounce pretty soon, this may be a decent level to start thinking about buying into some TLT for a move higher. And by the way, while you hold TLT, you get paid a dividend. I think the dividend is only about, probably 2.5% right now or something like that. But nevertheless, it's still a dividend. And you can probably ride it up. And if interest rates are going to go lower, as I suspect if the market goes down, you're going to test these highs and potentially go higher. So you might be able to get 5-7 points out of the TLT. So that would be something to look at. I think that's a good one for tonight. I think it's a wrap. This is David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.